Hey, good morning, everybody. It's Hammer. Today is Monday, April 13th, 2026. I, of course, am Hammer, the founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Great products to help you be found online to get more loans from Google and social media AI search. Go check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, where we talk about what's going on in the headlines, what's going on in the markets, and what effect it's going to have on rates. You can join me each and every weekday morning. If you want to join us live, you want a text alert so you don't miss a moment of the show, sign up for the text at hmmr.io/reminder or use this cool QR code over here. We'll get you signed up for those. We also send out a daily email, which is absolutely free, www.ratelockadvice.com. And you can sign up for our text alerts at www.ratetextalerts.com. They're $7 a month, but you can't beat them. Check them out. So if you're here this morning, say good morning. If you're watching the replay, don't forget, give me hashtag replay in the comments. Let me know that you were here. Don't forget to smash that like button, subscribe, all that good stuff, depending on what platform you're on. Let's say hi to the live folks. Mike Brown, Megan Bissell, good morning. Randy Tico, Giddy Up, Sir Charlie Bedita, great to have you. Sean Segaloff. Anyone else feel the Strait of Hormuz theme song should be the Hokey Pokey? You open the strait, you close the strait, you shake the strait all about. That's kind of funny, dude. Holly Johnson, good morning. Tim Kyla. Eric McDonald, Angela Walters, good morning. Great to have all of you here. So Michael Garcia slipping in. Good morning, sir. All right, let's jump in and get started. Let's take a look here. And let me pull up Presentify so I can draw on the screen. All right, so let's start off with a quick recap of what happened on Friday. Overall, it was a quiet day on Friday. There really wasn't much movement. You can see here everything in front of this dotted line right here. Things are quiet. We did end the day a little bit below where we were when pricing came out, but it wasn't much. It was just a little bit. However, it put us in a stance where we were suggesting to lock anything closing near term and cautiously floating anything else. One of the things that we definitely knew is that we're possibly going to have some potential volatility heading into the weekend, depending on how things worked out with geopolitical events. So 10-year Treasury yield this morning, 4.32, not too far off from where it's been. The mortgage-backed securities currently up 2 basis points on the day, which is nice because you can see right here, this long line. This line here is that we ended on Friday, but we started today with about a minus 20 basis point drop right here. And the reason that we were down about minus 20 basis points is because of the blockade on the Strait of Hormuz and kind of what that did for things. So there is a blockade. Trump has said he's going to blockade the Iranian ports on the Strait of Hormuz starting at 10 a.m. Eastern time, and it will apply to all maritime traffic to and from the Iranian ports. Iran chides U.S. restrictions as illegal and threatens Persian Gulf ports. Anyone else ever scratch their head? I know, like, we blow things up, we bomb things, we kill people, but only certain people and only military, but not civilians, because otherwise it's a war crime. I don't understand humanity and society's views on war. It's just not going to work for me. It's an all or nothing thing for me. I don't want to sound terrible, but if you're truly at a point where you are at military violence, then full violence. Otherwise, like, what is this? But it's illegal. But yet Iran has, demanded tolls from other countries to allow ships through, but that wouldn't be illegal. It's so funny. Ceasefire remains broadly in place, except in Lebanon, and that's between Israel and Lebanon. So what does all of this have to do? Or I might as well talk about this because this is actually a big one. Brent and WTI trade above 100 a barrel. And stocks set for an lower open. Now, here's one of the critical things about this is that even though oil has continued to move around, we talked about this last week, and this continues to show examples of it. We've seen a very big decoupling between the price of oil and bonds. So for a while, anytime oil moved, if oil got worse, bonds would get worse. It was inflationary and this was a big problem. Now we don't see that. So oil shot back up, bonds were down 20 basis points or so early on in the morning in overnight trading. And then domestic trading hits around 820. Look at this. It's almost like boom. And then right back up. Here we are. And we're basically flat on the day. We're, plus a basis point. So we're flat on the day today after what looked like, with the blockade, it looked like the door was open, that we absolutely could see things get worse. So it was basically a big false alarm. Hold on, man. I'm warm. I'm going to take this shirt off here. Ugh. So it was basically just a kind of a big false alarm, if you will, that this blockade would have any effect on things. It hasn't had an effect. Now, remember what's also happening here is we've got opposing forces when it comes to bonds, and I don't see this being talked about enough in the headlines. There's, of course, the immediate inflationary impact that $4 a gallon gas has on everything. I don't know about you guys. I haven't looked that closely. Has anyone seen fuel surcharges on anything yet? Let me know in the comments. Has anyone seen fuel surcharges? So, and then let's go ahead and answer some questions for a minute, and then I'll come back to that because it kind of pertains to this. So Randy wanted to know, how does Hormuz affect U.S. oil? It affects the price of oil globally because it still affects demand and supply. So, like California gets a lot of their oil from, where does California get their oil from? Ron, do you know? I forgot where. Like California gets their oil from overseas and refines it. Again, California is its own little mini ecosystem with their laws on refining and what gas they have to have, and all of that. So of course, that's why it's always so much more expensive, but they get their gas. Yeah. From Iraq. Yeah. Ron says they get it from Iraq. So like that, you would think that's really surprising. You think that California would get their gas from New Mexico, Texas, the pipeline, Alaska, all over the place. You would think that we would get our own oil, but no, they get most of their oil in from Iraq. So you do have some weird things like that, Randy. Of course, you see the price at the pump. Arguably, the United States, we have the capacity to produce our own, but yet we're still part of that global ecosystem. And a lot of these companies are global. Like Shell is an overseas company, and BP, British Petroleum. I don't know if they still are British, but all these things. So that's why gasoline prices here are just as affected as anywhere else, even though in theory the U.S. could be insulated from this stuff because we do produce our own energy and our own gas and our own oil. So, yeah, Ron said you have to get gas from overseas as you're pushing your refineries out. Okay. Japan does some special refining for California. Isn't that crazy? But anyway, that's off the topic. So, what effect does this have? Again, the main thing we want to be paying attention to is when you're looking at rate sheets right now, rate sheets are still in a really good place. And the impact that the increase in oil prices are having is very minimal, very minimal. Not a lot of impact at all. It's very likely that we see rates continue to stay here this week unless we get to a true boots on the ground escalation and we see major, military action and a full breaking of the ceasefire. Right now, the ceasefire, it has been broken, but it hasn't been broken to the point where it's there. Ron said, if foreign countries start purchasing gas and oil from the U.S., it might push prices down as it increases supply. Yeah. So, but what's the main part of the ceasefire is still holding in place. There's been very little military action. So that's why, even though this blockade is a big deal, I think that's why a lot of, we're not seeing a huge reaction to it, is that it's just more posturing. Right now, they've walked away, I believe, according to headlines, they've walked away, Iran and the U.S., from the table and all the conversation that was taking place for negotiation. And Trump said he doesn't care if they come back. And again, that doesn't mean anything because Trump says that kind of stuff. So markets blow that off too. Nobody really cares. Nobody puts any real legitimacy to that. So as far as all this stuff goes, we're in a really good spot. Rates are still in the low sixes, generally. So we're going to stick with that. We saw week over week, we've seen a drop. Let me see so we had the 27th, the 3rd, and the 10th. So the 27th, We were at 6.64, right? 27th, 6.64, the 3rd, 6.45, the 10th, 6.39. So we've seen improvement in rates over the last couple of weeks. This is, almost a full quarter. You're talking almost a full quarter point in movement between those 2 weeks. So we've seen rates that have stabilized and moved lower. We'll continue with the idea that the worst is still behind us and hope that that continues to be the case. Let's shrink this down and get the economic calendar real quick. And we'll talk about what we got going on this week. Okay. Move this over. Let's zoom in a little bit on it because we can. All right. So this week, Monday, you got, just some existing home sale data, nothing of any merit. There's really not anything here. Fed, Moran there speaking doesn't matter. Tomorrow, we're going to get the wholesale inflation data. And that should be, I believe that'll be March's data. It should be updated because we got the CPI has been updated. So, and then you got some Fed speakers, but it's unlikely. We might see a little bit of an initial reaction to this tomorrow, but it won't be too much of a reaction. On Wednesday, we've got really, again, not a lot going on. You got some Fed manufacturing numbers here. Really not anything of merit. There's nothing really to get into. Thursday, it's a quiet day. You got jobless claims. That's the thing. And of course, on Tuesday, I have to remember we've got the new ADP weekly wins that continue. And then Friday, there's really nothing going on except for some Fed speakers. So this should be a calm week economic data wise. Not much really to go on here. Not anything that's much of an issue or concern, and things will continue to be. So the reality is we're very likely to see some more drifting for bonds. I think we could see rate sheets drift a little bit lower. I think we could absolutely improve a little bit. Depending on how things go out. And, bonds continue now. The speculation is that, of course, we're going to see some energy shock to prices, but overall, we shouldn't see a huge inflationary thing. Consumers are fatigued. Companies are having to work that in at this point. So, and there's the access to credit is starting to change too. Let's not forget that. So overall, I don't think that there's much to worry about here. Expectations of a Fed rate cut still continue into the end of the year with a possibility of one cut. Again, bigger chance that we see things stay the same. It's about a 75% expectation that we'll see nothing happen. But then there's about a 20% chance that we'll see a rate cut. So markets are still, allowing that could be the case. There we go. And kind of where we're at for that. So that's it, man. That's kind of where we're at. It should be a quiet Monday. Today, reprice risk is medium, moderate. Mortgage-backed securities are flat to up a little bit on the day, despite the blockade. If there's escalation, I don't necessarily know that bonds will lose ground. We could see some of the, flight to safety. You could see some more traditional moves that way. I've said that before. And concerns that this will drag on is just going to, the reason that bonds are holding steady is that if this stuff drags on, it's going to hurt the economy eventually. And that's good for bonds. You're going to have a slowdown in the economy. You'll see the chances and expectations of Fed rate cuts increase, and we'll go from there. So let's see what you guys have to say, and we'll wrap it up. Supposedly, Iran walked away because negotiations were afraid to call back to Iran for approval. Fears of calls being tracked by U.S. or Israel. I don't know where you heard that one. I have not heard that. That's a cool one. Trump's saying that they don't want to give up the nuclear edge, but I don't know. Because I think they would yes us and do it anyway. So JP Morgan earnings tomorrow will influence the market. You think we'll see more of that? According to what I was seeing, the stocks are doing well and making money. The bond traders were having a harder time of it. So we'll see there. So. All right, my friends. Well, I'm going to wrap it up again. Thank you for joining me. Appreciate you being here. That is the skinny, and I hope you all have a fantastic day. We'll talk more tomorrow. Take care, everybody. Make it a great one. Bye-bye.